Okay. What's up, everyone? Good to have you here. Volatility on the chart, always interesting to go online, but I think that people didn't get a notification for this live stream because it is earlier than usual. So usually, of course, I upload a video at 7 p.m., which is in like Central European time, in like an hour and 20 minutes. And because I upload 3 videos a day and people can only get 3 notifications, a day is 24 hours. So if I, put something online an hour before, I don't think people get triggered. But at least I notified Discord, so they know what's up. And if people are on YouTube, they will know what's up. So Jandu, welcome. Gonna say thanks already. Dropping a like. Thanks, man. Appreciate the quick popping in and dropping the like as well. Now let me put my webcam on here and have a look at what's happening. So it's interesting because over here we got a big candle going through support. So we are now on the other end of support, now acting as resistance, daily naked point of control, and the daily offering no support at all. Now what is also interesting here is that volume is actually increasing. Yep. It is a little bit higher. So while price is moving to the downside, volume is increasing. And as long as that happens, you have to think about a potential wave 3, which was one of the options that we had. So of course you had over here potentially a bounce for C, right? And then moving back towards the upside. Potentially you had a 1-2-1-2 and then a move down, or you just break support and lower prices are possible. So the fact that we are now below support on high volume, continuation has probabilities, right? So what did I write actually in Discord? How did I frame that? I wrote it nicely. I said, here. I said high volume candle dumping through support, continuation is an option here, because based on Elliott waves, if you have a downtrend and volume is increasing, you are in a potential wave 3 environment. Now it does sometimes happen that you have a high volume end, like over here. The high candle is the end. Usually that's typical for a wave C. Right, it's like a wave C behavior where you have high volume at the end of a move and you never get a 4 and a 5, where then wave 5 is actually on lower volume. So, interesting. But now you can see how price is moving. Lower highs, lower lows. We got some volume coming in here, of course, before then a break. Move down. Again, a bit of volume, but now you see that volume is increasing. So the potential for continuation is there, which I think is interesting to go live and observe the different scenarios, because this morning video, or the video this morning, Central European time, so the one of 7 a.m., is very important because we spoke about the medium time frame, the low time frame. So medium time frame, 12-hour chart, low time frame was the 4-hour chart. And then we went, I believe, into the 1 hour to observe the range here for a short second as well. And that video showed probabilities, right? Especially at the end of the video. That's a very important video. If you haven't seen it yet, make sure to check it out. It's 2 videos ago, basically. So not the last one before this stream, but the one before. And we will go over similar content here because I do like to talk about the higher time frame stuff as well. Actually, I want to go to the daily because recently I've actually checked the daily scenarios, and I just want to invalidate or at least talk about a scenario which is very unlikely because of time. So yeah, price moving to the downside here. I do have an alarm down here all the way. So let's see if that one gets triggered, and if price does come back to the upside, let's have an alarm here as well. Because when we zoom out, it's nice to know. The question, of course, is, will it bounce or not? We're still in the wave C target area. However, look at the volume, right? The volume is a bit of a thing, especially as over here, if this is a, where is it? If this is a 1, 2, 3, 4, 5, then in a final wave 5, so this is the high of your 4, 1, 2, 3, 4, 5. This is the end of your 5. It ends on very high volume, which is unusual, right? So if we're looking for an impulsive wave 5 to end potentially a wave C, you like to have wave 3, yeah, but then you want another 4, 5. So you want to end with a new low on lower volume. So now we have to wait for a range to form, and either it ranges here, or because we're now below support, we move to the downside, and we just move to the downside. So there is at least one more level. Where is it? Did I put it in here? Yes. We have a monthly naked point of control down here. And this is still wave C area. The problem now is, of course, we have to wait for a range. If it just does this, doesn't matter what happens. So it's all about waiting and be patient for a range, for that matter. But let's zoom out and go to the bigger context, right? So, I spoke a little bit about what's happening here, and we're gonna zoom out. So, first of all, what's up, chat? How you doing, YouTube? How you doing? Jianlu, thanks for your like, mate. GG, ABC, good. It's lowering probabilities because of the high volume of this move. So first we want to see a range, and then you want to see another low on lower volume. As long as you don't get a bit of a solid range for a potential 4, but you get continuation, we're not looking for a C. Those were also the options we had, of course. You have the ABC for a bounce in this area. Let's zoom out here. You had the ABC for a bounce here. You had a potential of a double 1-2, which, by the way, is now invalidated, so we can remove that. So you had the ABC. Double 1-2, invalidated, it goes too deep. And the other scenario is, of course, simply continuation. You're not going to get a bounce. That's why observing the reaction is always so important, right? Now, what is interesting was the price action over here. We did not have any bullish divergences over here for this bounce to the upside. When price came down, though, there were bullish CVD divergences. However, have a look at what I wrote here. You can read this, yes. So I wrote here, quite a bullet. So we had this going on, right? Higher low on price, but lower low on the yellow CVD. Big bullish CVD divergence here. But I wrote here, quite a bullish divergences on top of the 786, the fib there. However, though, as the structure from the low looks to be a 3-wave zigzag, probabilities remain higher to eventually take the low, even if price would find a little bit of strength for a little bit of a move up. A double 1-2 is very unlikely as price retraced to the 8. I'll explain that. That is over here. So a double 1-2 in a 1-2-1-2 continuation up is very, very unlikely because price retraced to the 886. So I wasn't looking for this. So probabilities to hit the daily naked point of control are high from an Elliott Wave point of view. This was then the 786 support over here, but you had like this 3-wave structure. And what is important is that price also broke through the 0.5, which is over here. So let me open this in the browser with the text. So we had the 0.5 holding, which is the upper 0.5, right? For a potential wave 4, 1, 2, 3, 4, looking for a 5 down. The 0.5 was holding. For more upside, you want to see an impulse, meaning you want to see at least another high, because then you have a 1, 2, 3, 4, 5, right? So you're looking for a range and a move up to take this high. That also means you don't want this current little range to go below the 0.5 that I got below price, which was over here, pulled from this low to that high. You don't want to break this 0.5 because if this is a 1, 2, 3, 4, 5, the 0.5 is the maximum target. The invalidation was 27138. Invalidation is hitting that blah, blah, blah. And then the probabilities increase. We're just going to move towards the downside. So this was here the scenario where for the bulls, it was important to find strength for another high. And you want to do that before you break the invalidation here. But price continued down, reached 27,138. Probability is much higher for price to move down. And well, so it did. And now we are down here. So yeah, that's a little bit of the story of what I was looking for in this little range, or at least not looking for, but what I was observing in this particular range. And now we're just ranging here, which is still, of course, ABC area. But yeah, you have to wait now, preferably, for a little bit of a range to see what is next. Do we get continuation or not? We just took this low over here, I see. So price just took the low, it wigged the low, but as long as you're below support, not good, right? Then you can expect a move down. So yeah, interesting price action. Love to see it. George Martin, good to be here. Welcome, man. Neppy Dump, yup. Mark Dutch, afternoon, like just Card Crypto. Good to have you around, Mark. And Card Crypto, welcome, man. Good to have you here once again. How much time do you have? You were here in the long morning stream we did as well, eh? Errol Suleiman, welcome. Good to have you. Why does the volume matter? The volume matters a lot in Elliott waves because the waves are connected to the volume. So in a corrective structure or an impulsive structure, each separate wave has volume rules. And these are very important to get an indication of what the higher probabilities are from an Elliott wave point of view. So just very, very simplistic, right? I can go in a lot of depth, but if you have a regular impulsive structure, 1, 2, 3, 4, 5, then the volume that you expect in this structure, let me clean the chart a little. Never mind. The volume you expect is little bit to the upside, but nothing crazy. Then for a wave 2, it goes a little bit down. Then you have wave 3, which then has a high amount of volume, right? Then you have a wave 4, volume moving down again. Then you have a wave 5 on lower volume, and then you start a correction. So this is by far the most common impulsive structure, and this is the volume profile fitting the impulsive structure, where you then have a you have lower volume between the high of 3 and the high of 5. But also, if you have volume, for example, in A, B, C, if you have the highest volume in the high, right? If you are bullish, you want to see a 4, 5. But the moment price moves down below the local 0.5, a potential wave, so if you have a 3-wave structure up and the highest volume is in the high, you want to see a wave 4 and a wave 5 to then count the 1, 2, 3, 4, 5 impulsive structure. But if price does this and moves to the downside, closes below the 0.5, hitting the golden pocket, it invalidates a wave 4 for another 5. So the moment this happens, probabilities automatically increase. You're going to take this low. So that's the moment where short scenarios become interesting. You could have a WXY, but you're still expecting a move down. So the moment this happens, you always expect the low to be taken, which is actually something we then had today. So this exact scenario happened. That's actually a nice example. We had that over here. So have a look at the volume. You have a 3-wave structure. Look at the volume here, right? Volume increasing in this move up. That's what you want to see in a wave 3. But don't forget, that happens a lot in a wave C as well. So you have a move up. Volume over here is in the high of the move. So what you're looking for is a 1, 2, 3, 4, 5 if you're bullish. Now that means that for a wave 4, the maximum target is the 0.5. Now the 0.5 over here got hit, bit of a move, but then you had this move down. This move down invalidates a wave 4. The moment you see this candle, you immediately got to think, okay, probabilities now are very, very high. We're going to take this low. Of course, there is always the probability of getting into a diagonal, which is then an ABC, ABC, ABC. But you know, you don't like diagonals, they don't appear too often. So the first thing you think about is, okay, probabilities are high to take this low. One could look for potential scenarios to the downside. Not to forget, this could have been a WXY double zigzag. However, in the context of price, that was not something I was looking for. So the moment this was invalidated, probabilities were automatically higher to take the low, which it has now done, and we moved down through support. So like no reaction at all. And now we're just ranging here after taking a low that we had over here. So we took this low here at 26,740. Little bit of a reaction. So yeah, that is why volume is important. And of course, like in general, between zigzags, WXYs, there's certain volume patterns. So time, price, volume. Those are important things to look for in Elliott waves. Why can I not scroll? Hello? 1 second. We just close and we restore. It's not the first time this happens. YouTube is a bit buggy. Okay, there we go. Magdaj, Koen, early bird with 7 a.m. videos. Love to watch them with a cup of coffee. But what time you go to bed? I try to go to bed between 10 and 11, but most of the time it's 11, so I sleep like 7 hours a night. By the way, another thing that's important in a wave 3, right? So if you have 1, 2, 3, 4, 5, volume tends to increase in a wave 3. So the moment you make, in this scenario here, higher high, higher low, higher high, higher low, higher high, higher low, and each higher high has more volume, you expect price to just continue pumping from a wave 3 perspective till the moment you get into a wave 4, and then you get a 4, and then you expect another high in a 5. That's where you then exit positions from an Elliott wave point of view, or you exit them in 4, but you never know what happens really. But that's important. So, and of course, this 30-minute candle here we have a volume increase by a little bit. So price moved down, up, down, but on a little bit higher volume, which is interesting. So now price, here you can see it better on the 15. Down, up, down, but volume is increasing. So now you expect at least a range, then another low on lower volume to have a 3, 4, 5. But the question is, how far will you go before you get that bit of a bigger range and a 4 or 5, right? So, or a wave 5 down. Of course, it can go back above support, but currently we are below support. And I will zoom out in a second because it's good to talk about the higher time frame stuff like I did in the morning. Eric Dorion Laflamme, nice analysis from yesterday. It played out very nicely. Thank you. It's all probabilities, right? So sometimes we will have scenarios that will not play out, or I say something in the video and it goes the complete other way. That happened once. I apologized in the next video. I don't know. It's been probably like 2 months ago where the probabilities were high for, I think it was like a move up and it went down, or the other way around. And I think I even forgot to cover the other scenario. And I felt so bad. Of course, there's no financial advice, but I had one video where I was very wrong in my prediction. And then in the next video, I apologized on YouTube. It's online somewhere. I don't know. It's like 2 months ago or something. Diego, why it keeps deleting my texts? Maybe because you put links in your texts, or maybe a lot of emojis or that sort of stuff. YouTube tracks scamming activities, so I'm actually not sure. But look in my chat, you can see that I don't have any text deleted. So usually when someone posts a link, then I still see the name, but then I see message retracted or something like that. But I don't see any messages of you being deleted here. So I'm not actually sure. Diagonal pattern possible? Well, the diagonal now went too deep. Okay, we got to go through the scenarios. Nice French. Merci beaucoup. You know what, Eric Dorion Laflamme? I'm going to move to the south of France next year with my fiance. Do not forget US FOMC minutes at 8 p.m. Yes. Oversold for our RSI. Some bounce could be coming. Yes, because, you know, bit of continuation in the bearish scenario would be nice. But hey, bit of a range. See, potentially, of course, you always have the potential to have a bit of a bounce. But then I like to see bullish CVD, especially because we're below support now. So price now has to somehow find the strength to pump through support. Always possible. But I definitely like to see, like, you know, you want to see strength. Now we're below support. So, okay, let's zoom out. Go through the higher time frame stuff. Again, the ones that watch the morning video, 7 a.m. Central European time, that was a very important video. Okay, so what can we expect from what price is showing us, right? From an Elliott Wave point of view, let's start at the beginning. So I have my alarm set, and if anything happens, we zoom in. But we'll zoom in. We just start high time frame, and then we slowly zoom in. So the first thing I actually like to show you is this. Dun, 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 dun. It's been a busy day. Busy. Lots of writing. This is yesterday already. I have no idea. I'll just redo it. I'll do it quickly. So this is, I know this is a scenario. No, not WXY. This is a scenario that some people have been looking for. And then over here you have this as a wave B, expanding flat. Then you have over here from the low to the high to the low, you have your expanding flat wave C targets. It's not the only target, by the way. And you don't have to worry if you think I'm going to say we go down to 15K. For the people that think, I'm actually going to debunk the scenario because probabilities are very low for this scenario. But I at least want to talk about it. As people, you know, they get scared and emotional if price does move down. So it's important. We never know what happens. It's a probabilities game. But let me just say that probabilities are not on the side of this, where you are then looking for a WXY, potentially double zigzag. Ta-da. Okay. So this scenario is a scenario I have not covered in my videos for a very, very long time. And there's a very good reason for that. So in this scenario, we have an ABC, a 5 wave structure, ABC flat in a wave X for then new lows to come. Now, there's a couple of things that are very, very important in an ABC. And first of all, it's price and then it's time. So wave B hit the common target for a wave B. That's nice. Wave C ended around / inside the common target for a wave C. That's also nice. But here is the problem. Besides Bitcoin or Elliott waves in general, waves are not just related by price. They are also related by time. Time is a very, very important element in Elliott waves, which, I mean, unfortunately, by many, is forgotten. But it has a very important function in gauging the probabilities. So you will, oh, that was wrong. I need to put that one over here. So what I do now is I put FIB times on my chart. And I want the 2. Okay. So on the chart, you see 2 FIB times. Let me actually put you guys in the corner of my eye. Ooh, yep, okay. So that I can see what you guys are doing. 1 minute bullish CVD. After a push like this, I would not recommend looking at 1 minute bullish CVDs. You want to really wait for a bounce, the fish. First, wait for like a solid piece of structure on, let's say, a 15 or 5 minutes. bit of a move up, move down, and then potentially bullish CVDs. But yeah, give it some time. I would recommend, at least, no financial advice, but that's how I use CVD. I also use it on the 15-minute. However, so this particular scenario, what you're seeing here is that wave A and wave C are connected by time with the green line. So this wave C is 4 times longer in time than wave A. Based on probabilities, a wave C in an expanding flat is usually shorter than wave A, and the maximum amount of time for a wave C against wave A is the 3 fib time, not the 4 fib time, which means it should have ended over here, which it didn't. This was a corrective structure to the downside. And also this wave was a lot longer than A, but the maximum is like the 3 fib time. So there's another one that I have on my chart, another fib time, which is taken from the beginning to the end of B. So the beginning of A to the end of B, and then you double click here. So you're now comparing the time of A plus B against C. And the invalidation for C is then if it ends behind 2. Now this depends on the scenarios, but both of these lines act as an invalidation for this being an ABC flat. So the fact that the high has been made behind the 3 fib time of the low to the high of A decreases the probabilities a lot for this scenario, and now continuation to the downside for much lower prices, right? So I just wanted to get that out there. The probabilities from an Elliott Wave point of view are much higher, that even if price moves down, which is something we're looking for on the higher time frame counts that I cover in my macro and high time frame videos every Sunday, 7 p.m. It's in the folder on YouTube, macro and high time frame, if you're interested. We are looking for a bit of a move down, also based on what we see here. But then the probabilities are higher to take this high and look for higher prices. Okay. So now let's go into more local price action. Or well, local, we're still on the 12-hour. Oh yeah, don't forget about this psychology scenario, by the way. We covered this for a very long time now, which I think it's just interesting. Simple trend line. Many people look at the trend line. So how nice is it to have a fake out and then a move down? And then you have people shouting this, head and shoulders. So how nice is it to not reach the target, but move down and then move back up? Interesting stuff. Okay. So the only scenario really to have this as an end is to see this as a flat. Now, for the people that saw the morning video, might be a little repetitive, okay? But I can elaborate a little bit more because we're live on stream. So in an ABC flat, well, first of all, let's actually explain this one. If you select this as the low of A, and this is B, and this is C, and then a 335, C did not take the low of A, then we talk about a running flat, which is the most rare flat pattern in the market from an Elliott Wave point of view. Most common is the expanding flat, A, B, C, C ending far below A. Second most common, or I should actually say that differently, a more rare pattern is a regular flat. A, B still takes the high usually, and then C does take the low of A, but it's more of a ranging structure. And then, wait, where did my scenario go? And then you have the running flat. So in this scenario, low of A, zigzag in A, flat in B, 1, 2, 3, 4, 5. So now you have a regular flat over here, A, B, C. However, this wave B is by itself an expanding flat. And following the newest rules of Elliott Waves International, thanks to Jay-Z on in the group, so thanks to you, mate. But thanks to the newest rules of Elliott Waves International, it is very unlikely to have a flat pattern in a bigger flat. So a flat in B is very unlikely in a bigger flat. It's officially they say it's not allowed, but you know, probabilities, nothing is 100%, nothing is 0%. It's probabilities, but the probabilities are very, very, very low that that happens. So therefore the probabilities of this scenario are low because this is a flat in the middle of a bigger flat. Now, if, however, this is the low and you are looking for upside to this high, you want to look for bullish structures over here, right? We've been going over this for quite a while now. So we had the diagonal and we had the double 1, 2, right? So the diagonal 1, 2, 1, 2. Wave 3, also, by the way, first of all, a contracting diagonal is by far most common. So the trend lines converging. 1, 2, 3, 4, 5. Then you have a wave 2 and then continuation. That's by far the most common diagonal. It's a contracting structure. So if I then open the diagonal folder, then you can see, first of all, wave 3 is longer than wave 1, which is not allowed in a diagonal structure because all the waves between 1, 3, and 5 should be shorter. So 1 should be longest, then you have 3, and 5 should be shorter than wave 3. However, wave 3 tagged the 1-to-1, taken from the low to the high of 1 to the low of 2 with the trend-based fib extension tool, meaning probabilities immediately are a lot lower for a diagonal structure because it tagged the 1-to-1. It actually invalidates it. However, because on the line chart, it did not really hit the 1-to-1. I was like, it's just low probabilities. But then another trick that you can do is you take a channel from the high of 1 to the high of 3 and put it on the low of 2, and then you get this. So the next invalidation is if price reaches the lower trend line of this channel, because now it's not a contracting diagonal anymore, right? Now it's a channel, or in other words, it now has to become an expanding diagonal. But expanding diagonals are very, very rare. Very rare. So therefore the probabilities automatically become very low for this scenario. In the 1-2, in the double 1-2, 1-2, 1-2, the higher degree count is green. 1, 2, 3, 4, 5. Inside green, we have 1, 2, 3, 4, 5 in blue. So blue is a lower degree count compared to green. Green is the higher degree count. Meaning that if blue is a lower degree count, what you want to see is the blue 1 and 2 being shorter in time and price compared to the green 1 and 2. However, the second wave 1 is longer in price than the higher degree wave 1. And the low of 2 now, or I should say that differently, if this is a wave 2 in blue, it is longer in time than this wave 2, which is not what you want to see, which lowers the probabilities for this particular scenario. So these two bullish scenarios are not looking good, and the only one that's remaining is a regular impulse, but you don't want to see overlap between 1 and 4. That's not allowed, which clearly you have over here if this is 1 and this is 4. If there's overlap in price, you immediately have to think diagonals or double 1-2, but both of these have now a very low probability of playing out. So that's a bit of a problem for the bulls. Does that mean we can't go up anymore? Doesn't mean we cannot go up anymore, but the move up remains bearish. So there's two scenarios that I covered for a while. Over here we had the ABC, C is in and finish, we look for downside, lower prices to come. Most common target for C between the 1 and the 1.236 over here has been hit. You know, and you expect continuation, right? That's what you want to see. 1, 2, and then a big 3, 4, 5, eventually lower prices. The scenario where you could still see a move to the upside until this low is broken, that's the invalidation 25983, is a WXY, where this is a flat W, double zigzag in a wave X, and then you have a zigzag 5, 3, 5 in wave Y. So that is the remaining scenario, I suppose, for Bitcoin to move to the upside for wave Y, hit that 29.2K area, maybe a little bit higher here, 29.7, but this area in general, still inside or around a rare target for wave Y though, the 1.618, or less common, I should say less common for wave Y. And then you would expect a move down here. Because the bullish scenarios here have such low probability at the moment, the bearish scenarios automatically gain in probability. So that is something to remember, but also based on what we see here, right? If we do get a move up, then the probabilities are still higher. It's part of a wave Y, which means the probabilities are still higher to see a move to the downside locally. So I think we just hit the monthly. Is that correct? We just missed out on hitting them. Oh, we took this low. So we are reacting to the low. Just missed out on hitting the monthly point of control. But yeah, so if we then zoom out and we do look at this being corrective, then the scenario in mind is a 535 ABC, where either B is already in or you expect a golden pocket, right? And then the WXY. That is currently, can't change it, higher probabilities. For then eventually a C down, most common target for C is over here between 22K and 20.5K. And what is also important besides the Elliott Wave probabilities, if we look at some other technical analysis, this low is very important. And this low as well. So we have a double bottom at 24,750, there's always a high probability to grab a double bottom or a double top. It's like a magnet for price, really. But also, this low has already been taken by Bybit with a big wick to 23.6K. And just that, just the fact that Bybit took this low already with a big wick increases the probabilities that other platforms will follow and also take that same high time frame low. Plus, probabilities are very high. Bybit, or therefore the other charts, will fill the wick on the Bybit chart, which is over here. And the other day in a live stream, I actually gave quite some examples of this happening. You have a wick, you see a bit of a three-wave move, and you then fill the wick. And just for the fun and giggles, we can do that again. So if we have a quick, here. So we have a wick, three-wave move, and you move to the downside. Wick, three-wave move, down. I don't know, this is quite okay, I suppose. Oh, here's a big wick. So big wick, again, Bybit, three-wave move, down. Right? It's like a repetitive pattern. Big wick, three-wave move, down. This low was lower, took the low. So it's just something, oh yeah, this one, I remember this one very well as well. Three-wave move, down. So it's just something that you see very often. And once you see such a big wick, it also, so even with, like, the moment you are ranging here, probabilities remain higher to fill the wick just because of, past data statistics, really. So yeah, let's see what happens. But yeah, we explained the scenarios. I gotta get used to the object tree being up here instead of down there. The next support is the monthly 26,600, but it's like the only thing at that level. So let's see how price reacts. If that breaks, next one 26.2, 26.3. The one below 25.7, 26K. Below double bottom. And below that, we go to 21.8, 22.6. Resistance to the upside is now this box here that we dumped through. Let me go to the 1 hour. So that is now 26.8, 27K. That is the first resistance. And I actually don't have any target boxes above that. Let me quickly look. Are there any interesting levels? Oh yeah, we do have some resistance here as well, 27.5. But if you break that, I would expect moving to the upside. Why is it? And then we have this area over here, which is the 29.2K area. So here, that's 29.1 to 29.4K area as resistance. So resistance, 26.8, 27K, then you have 27,500, and then, you know, you basically have this 29.1, 29.4. To the downside, monthly point of control, 26.23, 25.7 to 26. Then you have the double bottom at 24.750, and then you have 21.8, 22.6. That was funny, Mark. So yeah, this is currently, from an Elliott Wave point of view, the probabilities, right? So even if you would find the strength to move up, it doesn't look good for the bulls. And if we have a quick look locally, the ABC, where is it? Here. Let me actually pull it now from the normal lows. Yeah, I mean, you're still inside the wave B target area, or the wave C target area, sorry. But you did break important support. And for this wave C, what is important is that you end with a wave 5. And this is a bit of a thing that over here you then have 1, 2, 1, 2, 3, 4, and then you look for 5. Now, first of all, 5 is incredibly long in time compared to 1, lowering probabilities, it is a 5. But also if we look at, from this high, the move to the downside here, if you want to count this in a like 5-wave structure to end a wave 5, you have like 1, 2, 3, 4, 5. But then wave 5 should have lower volume, preferably, than wave 3. So you make a new low on, let me remove some stuff here. You make a new low on lower volume. But look at the volume, it's increasing, not decreasing. And this increases probabilities for continuation in a potential third wave on the higher time frame. And also, if this is a wave 5 by itself, right? So yeah, you can have some, it's not often, but you can have higher volume in a wave 5 compared to a 3. But then you would still expect to see a bit of a range for like a subdegree 1, 2, 3, 4, 5. So you want to see a 3, range, and then you want to see another move down on lower volume. So as long as price is making lower lows and volume is high, it lowers the probabilities that you know, any finished structure is gonna be in. Also, the fact that price moves down but volume is increasing increases probabilities that this is still part of a wave 3 till you get a bigger wave 4, then you get a 5th move after a range, and then you get a bigger bounce, right? So then you get a lower low on price between 3 and 5, or yeah, you get a lower low on price, but also on lower volume. The 5 waves in C look done. Well, this is actually what I'm just now explaining, that, you know, as long as you don't at least have a range, a bigger range forming, it's low probability because of the volume and the subdegree structure of like this subdegree of the last leg. So you really want to see a bit of a structure and then take it from there. Maybe you get like bullish or bearish divergences or market structure or whatever. But as long as it just does this, it, you know, it doesn't make sense to count this at the moment because it just moves down. We are hovering now above the monthly naked point of control, 26.6K. So yeah, these were the target boxes. So okay, let's have a little look. Oh wait, the diagonal. I forgot to show the diagonal. There was an idea that we had. This one has been officially invalidated because the one-to-one has been broken. So now wave 3 is longer than wave 1, which has very low probabilities because then there's an expanding diagonal, which has very low probabilities in general. So I just click the X and remove that one from my chart. But it was a fun idea, as long as it lasted at least. Peter Ting, welcome, man. Good to see you again. Welcome. Nice. Oh wait, yeah, wait. Deleting text. We've been here. It seems like whatever I do goes terrible. It's pretty unbelievable. It's a nightmare. It seems like the market god has targeted me. Any advice? Did you write something? Any advice on dealing with everything I do goes terrible and the market is mad at me? Yes. Probably not necessarily what you want to hear, but the market is not against and not for you. The market is completely unrelated to your emotions, your trading. It's not trying to wick you and make you lose and all that stuff. It's you. It's you are the one with control. So it's you putting the stop loss wrong or having a late entry or wrong analysis. So the way to turn things around, and I know, like, look, it's probably not necessarily what you want to hear, right? Like maybe people want to hear like the market, it's the market's fault, but the market is always right. Like, so this is part of the trading journey. I have been there, and I suppose many others that are now successful traders have been in a slump where you're like, fuck, man, I'm constantly getting wicked. I'm always on the wrong side of the market. I go long, market goes down. I go short, keep hitting my stop loss. I'm losing money, but I need the money. Only trade with what you can lose. So I can't handle it. Yeah, so let me be honest. First of all, the market is always right. The market is not trying to wick your stop loss, manipulation, all that bullshit, right? That people talk. It's the market, right? Whatever you want to call it, it just moves, and it's about you to find the highest probability setups based on your strategy. And this is where many people go wrong. They don't build a strategy. So, and building a strategy is not putting a trend line and a pattern together or just some simple stuff. I'm working on my strategy already for 2.5 years, and I trade it, so I can only improve it. So there's a couple of steps. First is find the tools you enjoy using the most, track statistics on these tools, put tools together, build statistics on the combination, because now you're forming your strategy with entry requirements, and then trade the strategy and be confident. And you basically want to trade the same setup on a different day. So like same shit, different day, basically. And you also need rules for where do you put your stop loss, what's your risk to reward, what's your win rate. And statistics can be like, hey, if I enter on the golden pocket in confluence with the VWAP and I enter a short position because price moves up, I have no idea where the VWAP is, but imagine VWAP, right? Price moves up, and right on top of the VWAP, you also have the golden pocket. Nice confluence. You love to use the VWAP. You love to use the golden pocket. So you're going to you first track statistics on only the VWAP and only the golden pocket. So when it hits VWAP, what does it do? Does it bounce 3%, 1%, 5%? Does it fail? Does it go through? Like get the probabilities. Then you're going to combine it with the golden pocket. Because you love to use the golden pocket, you build statistics on the golden pocket. So now you're like, okay, probabilities of the VWAP, they look quite nice, but also the golden pocket looks quite nice. So let me try to combine the two. And now you're going to have a combination. So you're building your strategy. You put two tools together, and now you're going to track statistics again, which also include or should include where you put your stop loss. If a golden pocket plus the VWAP are on top of one another, and I would, price moves up, and I enter a short, where do I put my stop loss? How long is the wick? Is it 1%, 0.5%, 1%, 1.5%, 2%, 2.5%, 3%? And then based on these statistics, you will know, okay, if it's 0.5%, and I enter a short when this is in confluence, like the VWAP is in confluence with the golden pocket, if my stop loss is at 0.5%, then I have a 60% risk of being stopped, and then the market goes down or goes up, doesn't matter. If it's at 1%, you have a 40% risk of getting stopped, but your risk to reward ratio might be a little bit, worse. And now you want to trade based on statistics. We don't want to trade based on emotion. We don't want to trade based on I think. price goes up or down because no one knows what's going to happen. But if you have statistics and you have a lot of statistics, then based on these statistics, you can build a strategy and you know exactly what. Let me show you an example. Guys, I'm going to show you my own statistics sheet here. I don't do this too often, but it's just to get the point across. Oh wait, I can actually show you this first. This is one of the sheets that I used in the past to track statistics about tools, right? So you write a statement here. So for example, tool 1, VWAP. Statement number 1. Bounce of VWAP is 1, 2, 3%. I've literally done this in the past. Stop loss at 1%, hit. And then you have yes, no, total, and you get a win rate, right? And you just collect statistics. You backtest, and then eventually you forward test. You know, tool number 2 can be the golden pocket. Then you combine the two and you build a strategy. VWAP plus golden pocket. And then you do the same. You record your stuff. And this is what I use nowadays, which is of course a lot more complex. So let me actually get the right sheet here, because this is not this sheet, this is Diamond. I need my personal statistics, which is also not this document. Damn, or I have so many documents nowadays. Koenz trading, this one. Yeah. There we go. Stats. So what you're looking at here are some of the statistics, not even all, because I have different Excel sheets, but it shows you what I'm doing. This is trading based on data, right? I have setups that I've, over the years, I showed you with the other document over here, which is, with this one, I showed you, right, how I track tools in the past, how I track combinations of tools in the past. And then eventually, once I put things together and I have a strategy which, starts to work, that's when I eventually made this sheet and I'm tracking statistics about the strategy. Now, this is from November 22 to July 23, right? But even before November 22, I had the same sheet because I am tweaking my strategy. I'm trying to improve it. So I change it a little bit and I record statistics again. And then I change it a little bit and record. And what then happens is I know my win rate. I know my best session. I know where for my strategy, entries can be effective. I know what day are most profitable for me. I know what happens if I trade against or with the trend, right? I know my risk reward ratio against the trend, with the trend. So based on this information, I know my best and most profitable risk to reward ratio combined with my win rate is a 1-to-3. So Koen always trades a 1-to-3 setup. He doesn't go for 1-to-10s. He doesn't closes at a 1-to-2. I always trade a 1-to-3. There is an exception because I have a rule for that. I know exactly my best entry times. I know how long I'm in a trade when I enter a trade, right? Based on statistics, 39% of the trades from November to July at least are longer than a day in time. So I'm sitting there in that trade for at least a day. So I need to give it breathing space, right? So statistics is what's gonna evolve your trading from where you are now to where you want to be, right? I need a little bit of light. So, and I was in your position where I had the feeling that everything went wrong. And I think many traders have that feeling. So I'm not here neglecting the feelings, the emotions. I'm not being rude, or trying to be at least. I'm trying to provide you. You said, be honest. This is me being honest. I was in your position, as I believe many traders have been in your position in the past. Or maybe they are traders that are watching now that are in your position. They feel bad. The market goes against them. They always get wicked. They think it's manipulation. They think it's AI. They think whatever it is. Doesn't matter what it is. It's the market. Who cares? Your task is to build a strategy that you can just repeat same shit, different day. You find your setup, all the confluences hit. I have 9 boxes that I need to check to enter a position, right? This yellow folder here has my strategy. And I have, for an A setup, I have 9 boxes to hit, 1% risk, 1-to-3 risk to reward ratio. For an A plus setup, it's an additional 3 boxes that need to be hit, 2% risk, 1-to-3 risk to reward ratio. I might add another setup as well, based on statistics. So, and actually, as we speak, in the morning, I am recording statistics on paper this time though, because it's a bit quicker with what I'm tracking. But you see that once you get statistics, you can trade with confidence. And for the ones that don't yet know, if you go to Discord, there's a channel here called Discord Only Content, because it's people asking questions. And then I sometimes make a video. That's already a while ago. But here, this video, track statistics, counter emotions. This is the video where I talk about how statistics are going to help you to develop as a trader, because you get rid of your emotions as you are trading statistics. You are simply trading statistics because you don't know if your next trade is going to be a winner or a loser. But if you have a lot of data and you know your win rate and your risk to reward ratio, you know that if Koen is always closing his trade at a 1-to-3 risk to reward ratio, then his win rate is this over 100 trades. So I don't care if it's going to be a loser or a winner, because I know that on average after 100 trades, I have this win rate. I have this risk to reward ratio. You know, if I trade in the weekend, funny enough, that's the most profitable, right? Like you can see it over here as well. The afternoon for me is most profitable in general, these hours, right? Trading with the trend is most profitable. So data, data, data. And this is what I suppose many people don't want to do. This is the boring side of trading. And I'm in a rant right now. But with Diamond, right, the membership on YouTube, with Diamond, what I am doing at the moment, every morning I'm online for like a couple of hours tracking statistics, because I'm looking to improve the strategy or maybe add a little bit something different. That is what people don't see, right? What people see is what happens on the chart. They see positions, you know, you have influencers posting their 100K, whatever sponsored budget from whatever platform. They don't care if it loses or wins. It's not their own money, and you know, all that random shit. But this is important, right? This is the stuff you don't see. This is tracking statistics, which takes time, takes effort. It takes months to build a strategy. But when you do, and you do put in the work, you're going to make it as a trader, because 90% is not doing this. So what do you want to do? You want to track statistics. 90% is looking for some magic indicator, something market cipher. I don't know what. They pay like hundreds of euros of a product for a product that someone else made. But even if you buy it, you still need to build a strategy around it. You can't just press buy when it shows green and press sell if it shows red, you know, because then 90% would be profitable, right? Where are all the winning traders? It's still about interpretation. It's still about using it in the context of a bigger strategy where you also have other rules, right? So even if you buy some random stuff, you still need context, rules, data. You know, you need to build a strategy around it. And I think that is, you know, there's no quick way to being a profitable trader. You know, yes, people sometimes win from the very beginning. They immediately make a lot of profit. But how many of them are consistent? You know, they are doing a 150 RR. You know, that's what they see. Maybe they have entered 50 trades. They had 50 losses, but the one that is a 150 RR, that's the one they post online, and that's the one you are seeing. That's not how it goes, my friend. That's not how it goes, right? Okay, we're done with renting. This was a reality check over here, right? Like, guys, we're traders. We lose, we win. Fuck all that like 1 to 50 bullshit. That's not how it goes, right? That's not how it goes. Trading is consistent, slow progress, in time, profitability. Right? Not going to get rich in a year. That's not trading, right? Not going to buy a Lambo in 6 months. It's grinding. Anyway. Right, so where were we? Ooh. Let me put the light on 1 second. Oh, I just thought of something. Wait. Here. Wait, look. I just made this. Wait, this is important. I just made this before I went live. One of my best friends wrote something in WhatsApp. And he wrote a quote, which was, "The magic you are looking for is in the work you're avoiding." And he wrote that quote to me because it was like we work on our businesses, and so he shared a video, and in that video another guy said like, "The magic you're looking for is in the work you're avoiding." Now, what I decided to do is print a quote, but not just print a quote, but personalize the quote with, first of all, stuff I like and stuff I achieved. Now, or achieved both, who knows? Not going to say that. But anyway, one thing is I did an obstacle run, 42 kilometers, 100 obstacles this year, which was a great goal of mine, which shows discipline, patience, training, because all the stuff you need for trading as well. And then since I am a little kid, I've always been a fan of Lamborghinis. I'm not going to share what I have and not have on the stream, but what I did is I made myself a little one-pager with the quote, "The magic you're looking for is in the work you're avoiding," right? I know it might be cheesy. That's me, by the way. After I finished the run, I was absolutely knackered, and that's just a very nice car, okay? So, the magic you're looking for is in the work you're avoiding. And I think that's a very good memory, or very good thing to remember for everyone that, you probably know, like, I have to do this, that, but I just love that quote. I saw the quote, I was like, damn, I gotta make a quick one-pager and put it in my office. I have another quote. "If you want something you have never had, you must be willing to do something you have never done." Those are the only two quotes I have in my office next to my window here. So, yeah. Anyway. I hold my short from 28.4k all the way till we're done. Ooh, that is a nice entry. Matchy HK, good job. Good job. That's nice. You are a really good Elliott Wave analyst. Thank you, Davey. Welcome also. Welcome back. Not a nerd at all. I know, right? It can feel nerdy, absolutely. But yeah, it's data. That is one great chart you made right there, sir. Thanks, Mustafa. Mark Dutch, take notes. Yeah, new subscriber here from the Philippines. PH, I believe, is Philippines, right? Christian Kakayan, welcome. There's actually, I'm surprised how many people from the Philippines are on the channel. And also in Discord, there's so many. Neppy, I like your motivational quotes. So do I. I printed them. But yeah, it just, sometimes you just don't feel it, right? You're like, fuck, I don't want to do this shit. And then you look at the quote and you're like, okay, I got to stop whining and continue grinding. Wait, that rhymed. No pun intended. Nick, welcome, you. Welcome, Nick. How do you know, bro? Mark Dutch is a mod at Andy's place. Any advice for newbies? Yes, don't try to go too fast, too quick. Just explore the chart. I would recommend to not trade demo, but trade with like $50 or $100 or whatever is very, very small for you. If small is 1,000, divide by 10, start with 100, and then try tools, try technical analysis, but especially study. That's number one, by the way. Wait. Wait, this is before you start trading. You want to study. That's where you want to start. Let me put the light on here. So, studying technical analysis. This is for me years ago. I still have it. Technical analysis book about all sorts of different stuff. It all started with the three movements of the market, up, down, sideways. But then, RSI, MACD, money flow, all that stuff. Then I also went into more complex things like Elliott waves, which is what the channel is about. But it once started somewhere, right? This was my first drawing ever about Elliott waves here. Impulsive wave, corrective wave. And then in the pages after, I literally write down everything about the relationship between Elliott wave and Fibonacci, and ABC correction, regular flat, running flat, you know, all that stuff. And then I have a very big one, which is completely full, where I wrote about, well, you know, look, this is the, how do you call it? Inhoudsopgave, like what's in the book. You can see, you can see how full it is, right? So, yeah. Footprints, indicators, Fibonacci channels, patterns, volume, strategies, trading psychology. What else do I have? More stuff, which is CVD. Oh, CVD is in there. TPO, like order flow. You know, so start with studying. Observe the market. So you want to observe the market, study technical analysis, then try to implement it by not yet trading, but just using the tools, getting used to it. Then build statistics on the tools, then we go again, right? So then you want to build statistics on the tools, combine your favorite, then select your favorite tools, build statistics on them, combine your favorite ones, build statistics, develop a strategy, entry requirements, and then trade that strategy day in, day out. Diego, I will start recording more accurate stats and create a better strategy. I promise one day I will be able to return favor for all the precious advice. God bless you. Thanks, man. And good luck, right? So everything I mentioned is for everyone. But, you know, I wish people are profitable, right? That's the goal. Be profitable. Everyone should be proud of someone else's strategy. If you trade SMC, if you trade trend lines, if you trade order flow, if you trade TPO, if you trade Elliott waves, whatever your strategy is, right? You should be proud. If someone is profitable, like it takes, like consistently profitable, it takes a lot to be consistently profitable. And any strategy can work. Any strategy can work. It doesn't have to be complex. But it has to be yours, because a strategy is very personal. It's very personal. It depends on your time, like lifestyle, time, risk appetite, your favorite tools, you know, all the things, your patience levels. And it all needs to come together in that strategy. I always say that my strategy is a reflection of who I am as a person. But yeah, take care. If you are in a bit of a dip, either, you know, lower position sizes or take it, like don't do anything and just work on a strategy. So take it easy. And if something's up, just write me in Discord. Just go to the group and just write me in the questions to Koenz section or something at the bottom over here. And, you know, I always reply. So just send me a message, you know, and the group is very supportive as well. It's very, very active. By the way, thanks everyone. We're over 1,000 members since I think now a few days. But you can write anything in general or, you know, wherever you want to, because there's more people that struggle, right? And yeah, psychology is a big thing in the market. How to learn from you? If you click on the join button below the video, you'll go to the membership video, because there's memberships on YouTube. The Discord link, I just happened to see it. The Discord link is below the video in the stream in the description. There is the there is the Discord. Daywald, welcome, man. Yeah, you arrived at the right time, eh? Welcome, good to see you around. Good to have you here, Daywald. Particles of time. It's always emotional talking about having no emotions. It is, eh? Like no one has no emotions, and that's something I can recommend a book. I'm recommending this dude all the time. I don't even have an affiliate link because, you know, why? I should have, actually. The Mental Game of Trading. Jared Tendler. Very good. And he also says, you cannot switch off emotions, but you can learn to be aware of your emotions, because your emotions are they they are a sign of something that's deeper. That's like before you get emotional, there's already a couple of things that happened before you get to that stage and you make wrong decisions. And it's all about creating the awareness, creating a system to counter the emotion, and then like be early in detecting it and using the counter to then avoid getting into a roller coaster. So yeah, I like, if I don't read technical analysis books, I always read either trading wise at least, inspirational or psychology books. So I think the new like Market Wizards, the new Market Wizards, Unknown Market Wizards, some of my favorite books, Market Wizards, it's more like inspirational. Then you have The Mental Game of Trading, which is great. Trading in the Zone, Best Loser Wins, Reminiscence of a Stock Operator. Good books, good stuff. I'm gonna tattoo that quote on my forehead. Christian, I use trend lines for trades. Yeah, that's perfect. That is perfect. You can definitely use trend lines for good, solid trading, right? I'm in the market for a while now, and I know people also that I chat to in DMs, some friends that also trade very simplistic things, but they build a strategy around it. So it's not just not just trading the trend line as simple as that, but it's, yeah, they have certain rules and things they want to see around the trend line or the market structure that then gives them the confidence. Wati, welcome, man. There he is again. Christian, I answered your question. The link is below. Nahib Nawab, welcome. Good to have your name around, by the way. I don't recognize your name. Maybe the first time you're in the stream, or I just happened to miss it the other day. But thanks for being here, and thanks for the nice words, my friend. Dasa, there he is. Dasa Gaming, you finally catch one live. Good to have you here. Price moving to that monthly naked point of control now. Look, volume is still increasing. We are on the 1 hour chart. So, nothing has changed. For everyone that's here, the analysis part of the video was at the beginning. We use Elliott Waves, which of course is kind of like a predictional like type of analysis. The analysis from the very high time frame daily to what is happening locally was at the beginning of the stream. So if you're looking for the whole analysis part, make sure to go to the beginning, and you will have a very good idea of the probabilities of moving to the downside or upside. But yeah, you will get a good idea of the probabilities up or down. Because I always talk about probabilities in all my videos as well. So in my traditional videos, I first do the analysis part and talk to you about why a certain scenario is more valid than another one. And then at the end of all my videos, I have a probability section. So I have the timestamps, and then I have a timestamp called probabilities. And that's where I talk about, based on Elliott Waves, what scenario at the moment has the highest probability of playing out. And so far, it's been very nice. Look at... now I have to go to an old video. Shall I? I don't even know exactly, or it's in the pictures. Let's see if I can find it. Elliott Waves in a nutshell. There we go. Found it. Of course, it wasn't yet clear if it was WXY, ABC, or a 1-2 continuation in a wave 3. But this was the general idea. So from the low here, move to the upside, daily naked point of control, 28.3K, right? Now let's have a look. That was over here. Move up to, well, okay, we missed it by $12. Should have been more accurate. But, and then over here, a move to the downside to then take the double bottom. And then we have to wait and see and take it for there, because then it's about the reaction. Is it a wave C and you bounce, wave Y? What's the structure that you have coming to the downside? Or is it a wave 3? So yeah, this was the idea of the range. and yeah, not bad. So Elliott Waves it's a great tool to have and to learn, but of course there's many different ways to trade. It's and I also I have a separate entry strategy as well. I do use bits and pieces of Elliott Waves, but I have a separate entry strategy. Osmose. Hi Koenz, listening to your words make me change my mind from hare to tortoise, but patience kills in trading. Lot to learn. Yeah, patience can be a pain in the ass, right? Waiting for setups to happen. And sometimes, and this is the phase that I am in now for also the diamonds here, where I tweaked my strategy a little bit, and it really lowers my amount of trades. Like I added another rule, and the amount of trades at the moment, at least, are a lot lower than I used to have. So now I'm testing, like, wait, based on all the previous trades, was it good or not good to implement it? Because I can then remove it again, or make another A- strategy. But yeah, patience is patience and discipline. Very important. But welcome, and good to have you here. Where can I find FIB time for each wave? Well, the only kind of website I know that talks at least a little bit about time is this one. So Elliott Wave Tough. The link is in the description. It's the third link. It's called Elliott Wave More Information, the bit.ly link there. So yeah, they do talk a little bit in a lot of detail about time. But I think once you start to learn Elliott Waves, you will get a very good idea of what the time is between the different structures. And in gold, I've already done a full FIB time video about like each wave in relation to other waves in time. I still have to do something similar for the YouTube though. Can you check WLD? Not at the moment. Sorry, mate. We're focusing here on Bitcoin now. Do you have a website that has recommendation of FIB times and where it becomes less likely, or is it just your experience? Well, again, I guess of course you asked a question before I showed the website. So I guess Elliott Wave Tough is a good one, and then it's also my own experience, and then what I've read in different sources. So you learn stuff from the book because time is important. Oh wait, yeah, wait. I know a message that I shared in here for people. Pum pum pum. Up. Oh yeah, here. you can read this, and in the book. Oh no, let me show you some of the points I mentioned. So in the book. Oh yeah, here it says, Chapter 2, there are sub-chapters about alternation, wave equality, scale, and the right look. So that is all time related. So that's in the book, right? So that gives you a good idea of time. Then in Chapter 4, ratio analysis and Fibonacci time. So that's a little bit, it's not that deep, got to be honest. It's not that deep, but it does go into time. Then you have the different sources below the stream as well. So we have different sources that like Elliott Wave Tough over here, but also this link is a good one, in my opinion, which is the second one, the more detailed link. And they, in some bits and pieces, they talk about time as well. But I also think that the more practice you have using Elliott Waves in real life, the better your idea is, or how can I say this? The more you use Elliott Waves on the chart and implement it yourself, the better you get an idea of the time relationship between the waves. If you want to at least have a tip, then in general, most waves relate to one another between the 0.618, 1-to-1, or the 1.618, where wave 3 is excluded from that principle. So wave 1 and wave 5 tend to be around the 1-to-1. If not the 1-to-1, it's a 0.618, 1.618. Wave W and Y tends to be around the 1-to-1, 1.618, 0.6. So, there's ABC as well. So those are some to at least keep an eye on. So the 0.618, 1 and 1.618 are very important. Good questions, because time is very important. So Drew, good to have you here, by the way. And what was the other one that sent it? Oh, and Farshad Farouk. Yeah, those are some of the things that you could look for online. And maybe even like Bata4. There's a website called Bata4. I'm not sure if he also posts stuff about time. Some of his stuff is, or whoever this is, maybe it's a she, you know, or maybe it's something else. But sometimes he also posts stuff about time. He doesn't have necessarily like a header for that, but he can write it in his like text. My ex showed no emotions, just saying. Well, good that you left her if she didn't show any emotions. Summit Gouda, hello, hope you're doing fine. Yesterday, Bitcoin short trade strategy was really helpful, still holding. Of course, never financial advice, but I am happy you are in a profitable trade based on your strategy, your plan, your statistics, because I have no influence in anyone's trades whatsoever. Winners or losers are, of course, all your responsibility. Sun Angel 44, Hamilton fan by any chance? Hello. I've been watching your content for a while now, but I just realized I was logged in from my academic profile, so new account, extra sub for you, sir. Thank you for all the advice. Thanks for the extra sub, Sun Angel. Of course, if your other account is not watching any videos, doesn't really matter, right? But hey, that's a joke. So thanks for being here. And 44 sounds like maybe a Lewis Hamilton fan. Who knows? I love Formula One. You can teach SMC? No, I don't use it myself. And I only teach what I use in the gold memberships, as well as in diamond. Dasa Gaming, how are you doing? I replied to you on Discord, by the way. I don't know where we would potentially know each other from. I'm actually quite curious. The Contrarian. Try to measure it. Wait, before I go... Wait, have you read The Hour Between the Dog and the Wolf? How risk-taking transforms us, body and mind by... We are going to read that book. I'm going to put it in my notes here. There we go. Have you read The Hour Between the Dog and the Wolf? How risk-taking transforms us, body and mind. I like it. Thanks for sharing. Thanks for the hearts as well, whoever is Flotty here. Oh, hey, he might be pressing the hearts. I'm confused. I take bachelor degree and I'm third year college, but when I explore trading, I lost my passion on school. Any advice? Yes. Stick to your school. Because as long as you are not at least having a profitable trading strategy, which is based on statistics, there's no reason to leave your school. Of course, you have the stories online, which can happen. Who's that guy I follow as well? The YouTuber I follow is... Oh, who's that guy? Like the dark guy. The colored guy. He's really cool. And what's his name again? Oh wait, 1 second. I have a video here from this dude. How many times have you looked at King Swaggy? Yeah, I like his videos because it's a bit like nowadays. I mean, since he put his recent courses on, it's a bit salesy, which I don't really like. But it's a cool dude, and he talks about his story now. He quit school, but honestly, I do not recommend quitting school if you don't have a good alternative. So I quit school, but not for trading. And also not because I had no alternatives and I was going to just try something. I was a medical student at the University of Amsterdam, but I also was a professional gamer. And I was a programmer from 2007 to 2018. I did not leave school to play games, by the way. But I left school eventually because during my career, I got into certain positions in the gaming and esports industry, which is my background. I'm in it for 17 years now. I was a host on television while studying medicine. I was a early beginning keynote speaker while studying. I gave workshops to parents with gaming children while studying. And then eventually, companies wanted to work with me because I'm in the media regularly. So they approached me, but because I'm on university from 7 till 7, I could not work with the companies, and in the weekends they closed. So I wanted to take the opportunity to work with the companies. So what I did is I spoke to school and I said, is there an opportunity I can have a 1 year off? And then after that year, I want to go back where I was. Simply said, they agreed. So I had a good risk management plan in trading terms where I got the opportunity. So I already, first of all, I had stuff going. I was building a career. I was a host on television on ESPN. I was a starting speaker. Companies wanted to work with me. So what happened? I walked out of university. I worked with companies, continued speaking, set up the business parents, helping parents with gaming children. Things started developing, and I earned enough money to live by myself in that year. And I was like, well, now my hobby is my work. Why would I go back? But you see that I didn't quit school without having something already. It's the same for people that are in a job where, well, a job is different because if you save for if you have enough money in the bank, like savings to at least survive for 6 months, you can take the risk leaving your job and focus on your, what you want to do for 6 months. But as a student, I would always recommend to focus on your studies, but outside of your studies, dedicate as much time as you can into what you want to do, whatever that is, right? That might be trading, that might be setting up a business, but you want to build your trading, you want to build your business outside of your school hours, in the weekends. People go party and drink. You're going to study. Of course, you should party and drink and hang out with friends, but you get the idea, right? You got to grind outside school. And then there's going to be a moment in your career where you're going to develop, maybe you go to university and whatnot. And eventually things start going into your direction. And that is when you might be able to make a decision. But it sounds like you're not there yet. So I would definitely recommend to just continue, but try to build a trading strategy and everything, trading related outside of school. And then later, whenever you have maybe a profitable strategy and all that stuff, then in a few years' time, that's when you might be able to be in a decision to quit. But don't quit school if you don't have anything going already. It's the same as people quitting school because they want to be a pro gamer, but they're not there yet. They don't have the contract on the table, right? It doesn't make sense. So grind. Max fan, I'm watching from both. I see. He got world champion for the 3rd time now, right? He's doing very well for himself. How about Ethereum? I have no time. I actually got to go in 2 minutes. I have to. I got a chart of the week stream for the golds. Flot team, my man, pressing all these hard buttons, I bet. Or other people, of course, as well, I can imagine. I would not look at the CVD on the 1 minute in a strongly trending environment. Before I would, and this is from the beginning, it's volume increasing, price moving down. As long as you don't see at least a bit of a longer range on a 15-minute time frame and a bit of a bounce to the upside on a 15-minute, CVDs don't really, bullish CVDs that go against this move are not very trustworthy. We now also hit the daily, the monthly naked point of control, it looks like. And also CVD, especially in a move like this, I would keep an eye on 15. You want to at least see 15 bullish. But you want to definitely see a bounce, some support, because currently it's high volume to the downside. Well, at some moment in time, there will always be a retracement. But at the moment, what is best to do, Norman? Let's see, Norman fan. When we see moves like this, it's best to wait for a range to form. And when we eventually get a range, that is when we can establish probabilities again for, you know, a bit of a move up or continuation down. But as long as price does this, you know, we have to wait and be patient. So whenever the next range is going to happen, that is when things start interesting. So from an Elliott Wave point of view, counting the sub-degrees here don't really matter, because we have to wait till price is going to stop dropping and starts building a range. And then when we get the range, that is when we can look for up or down again. We are currently at the next support area here, Pleasure Christian. So we are at the monthly naked point of control, but as you can see, it's only a line. It's literally the only thing I have here. But then below, 26.2, 26.3. Below that, 25.7, 25.9. Below that, double bottom, 24.750. And then below that, we go to the lower 20s, 21.8, 22.6. Below that, 20.2, 20.6. And below that, 18.7 to 19.1. Resistance at the moment is this box, 26.8, 27K. Next resistance, 27.5. And the next resistance is this one over here, 29.1 to 29.4. Guys, I gotta move because I have a chart of the week stream coming now. We've been online for 1.5 hours. So solid stream here on what day is it? Wednesday. On the Wednesday, we spoke about lots of things and covered a lot of things. But one raw artist, a pleasure. Also welcome, good to have you around. But yeah, it's time to continue with the evening. I wish all of you, of course, profits, but also a good evening. Make sure you trade safe at 8 p.m. tonight. By the way, we have news over here. The meeting minutes, as I believe TXM also mentioned at the beginning of the stream. So make sure you trade safe around 8 p.m. because, you know, it's already volatile today, but this might increase volatility to the up or the downside. That's, you know, we never know. It can increase volatility. So make sure you trade safe in 48 minutes. In 48 minutes, make sure you trade safe. Okay. And then we'll see what happens. Also, tomorrow is news, by the way. Thursday, 2:30 p.m. Oy. What a time. What a time on the charts. So, hey, everyone. Thanks for hanging out. Thanks for being here. Enjoy your evening, mornings, afternoons, nights, wherever you live in the world. And yeah, we will see each other again tomorrow morning at 7 a.m. for another video. So see you then. Bye-bye.